Bitcoin is a commodity with no common issuer or pre-mine, but also with a fixed supply. And then you have these assets like Ethereum that doesn't really have a known supply. And so I'm just curious, like, I think you sort of believe in also those types of treasuries as well, but like maybe you can fill me in on the bull case since the other guy couldn't.
Yeah, well, I think, so the way I'd frame Ethereum and these other smart contract platforms is that they are platforms, they're application platforms, which is just essentially a derivation of a tech company or a new type of tech company. So it requires a different framing when you're looking at them as an investment. And I think that Bitcoin obviously owns that commodity framing because of the supply schedule and because of the level of decentralization. Now with Ethereum and the Solana and all these other platforms, you've got a case to be made that actually, they are going through an adoption curve, which is going to be pretty dramatic over the next couple of years. And I think that, with the amount of adoption that they've already gained, and that's putting aside, I guess, the activity metrics, which we do track as on-chain analysts in the space, which I think is a lot of it is gamed. And
you're talking about the wash trading.
Yeah, wash trading, but also just, there's, activity, there's cyber, attacks, and like there's tons of stuff that inflate numbers. So you have to look at it sort of more holistically, but it's undeniable that you're seeing adoption. And now you've got basically integration with the financial system with stablecoins, and stablecoins are going to move on blockchains. Blockchains have facilitated the need for the US government to find new buyers of its debt. And so whether we like it or not, these platforms are going to facilitate a huge amount of global commerce.
Let me ask you about that. So yes, I 100% agree with you. The number one stablecoin, and not by a little bit, but by a lot, 75% of the market share is Tether. Mm-hmm. Powell from Tether is a Bitcoiner, and they announced just a few weeks ago they want to move it all over to the Bitcoin blockchain. They're moving it to RGB, number one. Number two, we've seen some of the other players and new entrants are building their own blockchains. Mm-hmm. So they're not going to use Solana or Ethereum or Bitcoin. They're going to build their own. Mm-hmm. So it seems like the dominant player wants to move to Bitcoin, not Ethereum, and then the new entrants want to move to their own platforms.
Yeah. So is the argument whether you should buy Ethereum or one of these other platforms, or is the argument, are blockchains going to increase in terms of total usage?
I was more thinking about just from the treasury standpoint, where like, how does it make sense to buy an asset that's not clearly defined, has no fixed supply? That's what I was kind of trying to like. Understanding from a speculative standpoint is one thing. Creating a treasury company around it and raising money in public markets seemed to be like a different animal for me.
Yeah, look, I mean, I know where you're coming from. Like I think it's a changing of investment philosophies all around. So let me give you an example of what I mean here. The Swiss National Bank, the central bank, started buying Apple and tech stocks back in 2016. That seemed crazy, right? But they understood the debasement game. And so they thought the best thing they could do with their asset, with their reserves, was to put that into tech stocks. And that proved to be an incredibly smart move.
Yeah, worked for them.
Unfortunately, not mirrored by a lot of other central banks. So, I mean, where is the growth happening in the global economy right now? If you look at the legacy financial system or the crypto economy is exploding, and putting all the gaming aspects aside, settlement values on blockchains are growing at 78% compound for the last 5 years. And that was really before government said, hey, stablecoins are okay. Now, the question of like whether you want to take a investment punt on Ethereum versus Solana or versus, I guess, any Stripe's new platform or the new Tether blockchain, that's more like a investment decision which is a lot of risk, and therefore it becomes very tricky for these digital asset companies. And there's a lot more risk there with a platform that's in a hyper competitive space where there's basically no barriers to entry. It's just open software that anyone can fork or replicate. But there's also a thing called network effects, which are very hard to budge.
Yeah.
And so there's definitely network effects exhibited through, the top smart contract platforms. But we'll see in 5 years' time what the right smart contract platform is or has been the best performer, if at all. I mean, I put Bitcoin at the center of my entire investing world because it is, in my eyes, and I think in the eyes of even sovereigns now, it is the emerging global reserve asset, and it is the clear leader and will continue to lead. But I do look at those other platforms as investment punts. But when you start looking at the digital asset companies in that space, you can argue that the high quality ones come first, and then it starts to tail off, and then you've got added risk that Bitcoin doesn't have because it is not a fix. It doesn't have the characteristics of the monetary network of Bitcoin. And the other thing that we don't mention, we haven't mentioned yet, is that the reason why Bitcoin is not only because of its monetary properties is a sound investment with lower risk of sort of downside over the long term is because of the energy aspect. It is gobbling up excess energy around the world, is now strategically important for companies that actually understand how to derive value for their citizens, that they bring Bitcoin mining into their economy and they subsidize it and promote it, because not only will it monetize excess energy, it will drive investment in a space which is directly linked to AI. And so that whole aspect just supports that network growing even faster. So is this, I guess, to come back to the original point, there is a lot more risk, a lot more uncertainty in putting any other digital asset on the balance sheet. But still, there's an argument to be made that the underlying smart contract platform assets themselves, the ones with network effects, will continue to outperform, outperform tech stocks, for instance, maybe not Bitcoin, but should do well. And, you allocate with the right sort of position size to that because of the volatility and the uncertainty.